So and just like that, we move into profit by using these buy stop and sell stop orders. We're able to usually get into a. Now, it doesn't mean it's going to stay there, of course. It just means that if you know how to manage risk, you can move into a risk-free position quite quickly. This is negative 0.46% risk, which means it's a positive profit. Because this number is positive when we have a negative. A positive risk. If we lock in more profit, it'll reflect that by saying we now have gained 1.15% on our account with this particular trade. It can continue down or it can continue up, but either way, we're in a position to to be prepared. So that just took us out there to the bank. So we have 724 small profit, and we just come back at the low, put in another order with stop loss less than 2% risk, and we think of this as fishing lines. There we got a small fish out of the water, and we put our line back in the water at this level. So we have one here and one here. We're always bracketing the market, because that is our statement that we are proving to be on our commitment that we are not projecting our opinion to the market. I don't want to, because if you only have one of these on, you're projecting then your opinion to the market of what you think the market's going to do. And 9 times out of 10 that fails. And the con or the setback of this idea is that sometimes you get pulled into the trade and then stopped out immediately, and that happens for your max loss. Sometimes a little more because of slippage. We're prepared for that. That's why we picked 2% to begin with. Then just like that, we have a risk on position.
I can't find you.
Hold on. That is how you take money from the market.